All right. Hey, Robert.
Hey, Yaron.
It's been a long time. Robert and I have been off for the last, I don't know, it's 4 months now, I think, for primarily for personal reasons related to Robert. Also, Don is not with us, at least not full time. I'm sure we'll see him pop in here and there to the Ingenuism project. But Robert and I will be continuing. We're back on a regular basis. I'm not going to commit to how regular, but it'll be regular. And yeah, a lot has happened in 4 months where we've been kind of off air. A lot has happened in the kind of world that we've been talking about a lot, tech and progress and the future. So let me start with a question, right? A lot of the stuff we've written about Ingenuism has included this idea that things are amazingly good and that massive amounts of wealth will be created and the trajectory is just exponential and amazing and everything's good. And I don't think we were quite Pollyannish in presenting it, but generally very positive and the data supported that. And over the last, 4, 5, 6 months, things have stalled and a lot of the wealth has gone away. Markets, stock prices have come down a lot, particularly among the technology companies that were doing very, very well last year. So what's your kind of broad assessment of where this puts us in terms of the wealth that's been created and also how we view the future from here?
I think that it's more accurate to characterize it as we are of the position that things can be absolutely amazing and that the potential is virtually unlimited. The upside is so large for humanity, and that 2 years ago, 3 years ago, when we first started talking about this, there was already an enormous amount of wealth that had been created. It was in conjunction with a slowdown in the overall measured economic growth. So there was this weird contradiction. But you just had to look around, whether you wanted to look at market capitalizations or just what was available in people's back pocket versus 10 years before, 20 years before, that made it really compelling to consider why this was happening and what was unique about the 21st century. And I think that all still holds. And we've given back a lot now relative to 3 years ago. There's still been more value created, but yes, from the peak, we have given back a lot. And there's been a bunch of excitement around new ideas and new technologies, and some of it won't pan out. That's always how it works. If everything worked out, that would be fantastic. But this is a journey of discovery, and it requires that you try things, that you figure out what works, what doesn't work, you stop doing what doesn't work and focus on what does. So none of this is surprising, and it's happened very, very quickly. That's what I think is the most surprising is 5 months ago, people were very optimistic and very valuations in the stock market were still very high. And then a bunch of shit happened. And now people are, I think, justifiably less optimistic. And it points to the fact that we're not guaranteed to get the good outcome. When you get a regime shift in terms of, a country invading another country, if you get a shift from regulations that are fairly onerous to regulations that are very onerous, these shifts really make a difference. They really add up and compound over time. And so what seemed like big deals, something that's a big deal in the present is actually an even bigger deal in terms of its implications for the future. So I think a lot of that has gone on. And,
inflation, of course, we got, something that we haven't been used to. And a lot of people have grown up without even ever seeing inflation. A lot of the generation that's investing or starting companies are used to 0% inflation, 0% interest rates. And that regime is shifting as we speak.
And that has the same kind of secondary implications because in the past, like take the early 2000s after the first internet boom, and there was a big crash. Uh, there was a different environment in terms of what policymakers could do. Budget deficits were much lower. In fact, the budget had been in surplus not that much before. Interest rates were significantly higher. Inflation was still on a general downward trend. There was a lot of room for mistakes on the policy side. So you could try a lot of things, and we don't have that today. So the fact that inflation is running at 8% is, of course, a burden on economic activity. But the fact that it means nobody can do anything about it from a policy perspective about a slowdown is the bigger problem. So we basically spent all of our ammo on the pandemic, which might have been a good idea. But now we're going to pay the price.
And the financial crisis, I think, was still carrying that load with us.
Well, the financial crisis definitely contributed to the buildup of the load, but I think it also created a complacency that, well, nothing really went wrong in terms of inflation and overall economic growth. So why not just do more? And that's a very dangerous attitude.
So, in particular, the last few months have seen a massive decline in valuations in crypto. Bitcoin is down, Bitcoin and Ether down, 50, 60% from their peaks. But some coins are down 90+% from their peaks. And at least one supposedly stable coin turns out is not so stable and is basically gone down to close to zero. It's a few cents on the dollar. Now we've seen this with every new technology. I think there was when the railroads first came about, there was massive amount of money flowed into railroads, and a lot of railroads were built that were meaningless and didn't result in anything. And there was a huge correction, and we saw that, of course, with .com. You mentioned that the sharp decline in 2000 that started in 2000 lasted quite a long time. But of course, some of those players in the railroad, some of those players in 2000 went on to do great things. I mean, like Amazon. I mean, we remember Amazon because we were following them closely at the time. And 99, they were super expensive. 2000, not so much, but they survived. And if you bought at any time, you would have done phenomenally well. So how much can we extrapolate to what's going on right now?
Well, it's always dangerous to assume that the future is going to be the same as the past, but I think that there are some principles that are necessarily embedded in how these movements forward go. Crypto is interesting because it hasn't really found its niche outside of basically speculation and turning people into millionaires and billionaires, which is a great niche, but eventually there has to be something more. And what that more is critical to what the long-term prospects are. So if we use the example of Amazon, if Amazon was just selling online, being the dominant seller online, being the best at putting the right products in front of the right customers at the right time, and then fulfilling logistically on their orders quickly and at low cost, that would have been a big business. But it would have been much smaller than where Amazon finds itself today, even after the pullback, because Amazon created all these other businesses inside, the biggest and most important being really the genesis of modern cloud computing. So what crypto's role is in other than being a something for people to trade and play with outside of, say, call it a casino, where's the value creation is going to be the determinant of whether crypto follows the internet boom or whether it follows other booms that have fizzled out, and we don't talk about them because they never got as big as crypto did. But there have been big pushes into, for example, artificial intelligence over the years. There was a series of big pushes into solar, and all of them fizzled out until the last one. And that's not to say that crypto will or won't, but something has to show up where you have a working ecosystem where people can do things more efficiently or things that they couldn't do before. And it's not there yet. So that's why it's still interesting, because I'm not saying it won't get there, but it's not there yet.
Yeah, so the value added of crypto is not obvious yet, and it's not being used as such. So Amazon, even just as a retail store, the value added was obvious. It was there. It had some value. Crypto still hasn't. We keep talking about smart contracts and blockchain transactions and replacing money and easier and better and moving capital, but it hasn't really none of those have really taken off as platforms for people to actually use. It serves mainly for the speculative issue.
Right, and that doesn't mean that potential isn't real. It just hasn't been realized. And there have been some attempts at moving towards using it as a medium of exchange, a legitimate, not just for illegal transactions, but mainstream medium of exchange, and that would be sufficient. There's a huge value to having a low friction, widely accepted medium of exchange, and having it outside of government-sponsored currencies. That would be really interesting, and I think really valuable. And we're clearly not there yet. Nobody's going to pretend that you can have take Bitcoin, for example, that you can have something used as a mode of transaction where the prices are still actually quoted in dollars, and you're just converting into Bitcoin, and it's wildly fluctuating. You need something like a stable coin, and that's why the stable coin experiments are so interesting. Whether we're looking at Tether, which is a purportedly backed stable coin, which is going to be really interesting because they're getting massive redemptions, and so far they seem to be coming through like you would expect with a backed stable coin. People can get their money in, get their money out. That's something that is, I think, a necessary ingredient to whatever the value proposition for crypto becomes, where you've got something that isn't a dollar, but you can treat it like it's dollar. But having a backed stable coin, the business model is both, it's either not that interesting or it's fragile. Because you either invest the money into very low, well, actually in a higher interest rate environment. It'll be interesting to see. But what it has been is you either put it into treasuries and earn 0.25%, and then even if you have $70 billion of Tether out there, your float is only 0.25% of that, and you do have expenses. It's not a zero cost game. And so it's not that interesting. But if you just go a little riskier and you put some into Lehman Brothers commercial paper, and Lehman Brothers has been around for 100 years, so what could possibly go wrong? Well, of course, Lehman Brothers isn't around anymore.
And I think regulators have kind of forced Tether to get rid of the commercial paper and go back into and make it all in securities. So at least they're putting pressure on them.
It's an interesting push-pull because you just extrapolate from that. Well, if you're going to go AAA rated commercial paper, why not go BBB rated commercial paper and increase that float by another, double the float again? From a business model perspective, that makes sense as long as things go well, and it can be a really interesting business model. But that, of course, eventually blows up. And so the algorithmic stable coins are fascinating because they're incredibly fragile, but they do have stable equilibria that are just not long-term stable, where you can have basically taken air and created tens of billions of dollars in market value, and value that's actually based on a market price, and create utility through a stable coin that then doesn't, because Tether can't pay interest, or they could only pay a very, very small amount of interest in a higher interest rate environment because they have to make the spread. But an algorithmic stablecoin can pay interest. It's an entirely parallel financial system, but it is incredibly fragile when you get any sort of significant bump off of it. I don't know if you want to talk about
Yeah, I mean, I read a little bit about Luna and Terra, and wow, I mean, so you've got two, my understanding, and there's a lot of complexity here, but you've got two cryptocurrencies that are basically designed to stabilize each other, but neither one of them is backed by anything. There was an attempt to back them up with Bitcoin, but not enough, right? There wasn't enough capital put into the Bitcoin. And of course, Bitcoin declined 50%. But so each one of them is floating on air, and each one is meant to stabilize the other. And that's what the algorithm does. But if both collapse, nothing prevents them from both going to zero. And at the same time, there was this other element of it, which was this where they were paying interest, and they were guaranteeing something like 20% interest on deposits on loans or something like that. So it seems like just some kind of a Ponzi scheme run, on steroids. But a lot of very smart people put their money in it and lost a lot of money in it.
And it's incredible because it was, so we can use the analogy of they're both sitting on air and rising higher and higher, but for a while that's actually stable. And if it's stable for a while, could it be stable forever? Well, yes and no, but maybe.
I mean, the only way I can see if it's stable is if the first condition is met, which you mentioned earlier, and that is that there's a real use case for the currency, for the crypto. That is, if it's actually being used for some productive thing, and it's unique, right? Because in what sense am I better using Luna than I am using Bitcoin, or I am using Tether or Ethereum or something else? There are 2,000 of these or whatever. So there has to be some reason for me to hold it that's unique and sustainable over time. And they still don't have that.
Yep. And that's what makes it so cool at this phase is it's all based on the belief that will show up. And what's too bad about Terra Luna is that whatever runway they had was insufficient. And you don't know whether 2 more years would have just made it bigger losses, or it would have actually built a stable ecosystem where something was being done such that people wanted to hold the Terra stablecoin, not just because they could use it as a stablecoin to flip into other cryptocurrencies, but because it actually made their lives better in some particular way, or allowed them to do things that they couldn't otherwise do. And then, Luna would have been like, investing in the startup rounds of the company that, of course, it's not a company. And we've talked about this with initial coin offerings. And that's what basically these are. They're just a way to avoid the regulation that came from calling something an initial coin offering, because you don't want to create a company. If you're creating a company, you might as well just go to Silicon Valley and raise venture capital and go the traditional route. But you want to have the general effects of a company where you can organize a lot of different people, split up the economic value in a way that's transparent and incentive compatible, and end up with something that's hugely valuable and changes the world. And the first use case, the first one that actually works, that doesn't just get off the ground and last for some period of time, it's going to be something we'll be talking about for generations.
Yeah, I mean, I'm still waiting. I still don't have an inkling of what that looks like. But what's interesting about Luna, the Terra, was that they had an incubator where they were incubating companies, basically to use the Terra Luna coins to create different business models, and they were seeding all these things with. So the whole idea was to create the use. But I think partially because of the speculative nature of these things, the value got so high that the first sign of trouble, people just escaped. And it's interesting because some of the smart venture capital left early. So I think Pantera made $100 million off of because they got out in March or in December or something like that, and others got out early. But a lot of people lost a lot of money. Of course, it's money that, in a sense, it's not clear they ever had.
Yeah, they sold their Bitcoin to buy their Luna, so they lost 100% instead of losing 50%. And who knows what going forward. But I think that there's a real need to drill down, and it's something we should talk about this summer, to drill down into, what are given that this is financial services, that's what it really comes down to, is what are the potential sources of value inside of cryptocurrency and what that might look like. And that doesn't in any way limit it, because I would have never come up with an algorithmic stablecoin because it seems way too crazy to me. But maybe it works in certain conditions, and it certainly was an interesting experiment. I think we definitely learned something from it. But having you can imagine there being a migration to where the protocols really become a technology that is like every other technology that's sold to a bunch of different companies, because it's cheaper, it's somehow better, whether it's cheaper or just better, to have it done through a central platform rather than everyone doing their own. And the obvious one is we already have all of these loyalty programs. We have all these frequent flyer miles and hotel points, and you see more and more loyalty programs being created, because now you can create a loyalty program for a local 2-store supermarket chain that just needs to put it into your phone and have a basic app that they can use to send you coupons. Well, all of these loyalty programs, it doesn't make a lot of sense to me for them to be done haphazardly. It seems like there should be a loyalty coin, and that it could be personalized for any business, and so it would be convertible, and so people could say, I've got 100 billion hotel points and I don't stay in hotels anymore. Maybe I could use them on Airbnb or to fly or fill in the blank.
Yeah.
That sort of platform and a basic technology that adds value by adding capabilities that don't exist today, that kind of outcome for crypto makes a lot of sense to me. Now, because it makes sense, it's probably not the killer app. Killer app is something that seems going to seem crazy, but actually works.
Yeah, and I mean, you need crypto for it. I mean, is there something about crypto that's unique in terms of its into the blockchain, or in terms of the anonymity that benefits something like that?
I think that the ability to connect disparate items of value that you wouldn't normally think are the same without triggering without triggering traditional commerce, so taxation.
Yeah.
Is a big potential value case here, because usually if you buy or sell something, the state government, the federal government, somebody wants a cut of that. Versus if it's a single coin that has just been branded, then you're exchanging it, and it blurs the line. And I think a lot of the value from financial services generally is reducing these kind of frictions, and avoiding the deadweight costs that are embedded in the system. And I don't see why it would be any different for crypto. And in particular, we're already seeing that, where something like Luna being a way to have a quasi-equity investment in the Terra ecosystem without triggering the Securities Act regulations. We're going to see more of that, and it's fascinating, because if you think about where things have been going now, I don't know even what's going on with NFTs anymore, because it seemed like it was a flash that has burned out. But it's really cool that NFTs have been tied to art and collectibles, because they basically become expression. And it gets very difficult, particularly in the United States, to regulate, tax, restrict, do any sort of your traditional activities when it interferes with what is essentially speech. And so, NFTs.
You still can tax it, right? Because you can tax art, you can tax the exchange of art. So if I sell you an NFT and you then sell it for a profit, that's taxable.
You can definitely put taxes onto exchanges, and that's why having it be, because that's the push pull of non-fungible. When it's absolutely unique, when it's non-fungible, then it's hard to exchange it without selling it. But if you were to make it non-fungible, but at the same time fungible at a different level, then you would have a lot more flexibility in how you use it. And that's what I can imagine with these loyalty points. Instead of buying and selling them,
Yep.
and incurring taxation, you could imagine them being inherently convertible, even though from the perspective of a United Airlines, they're like, yeah, no, these are United miles, and their customers would view it that way.
Yep. Yep. So they still benefit from the marketing of having a United program, but the customers benefit from the fact that these are, from their perspective, convertible into anything they need them to be.
Yeah, and this isn't a new idea. If you think about, there are branded credit cards. You could get your Disney credit card or your Golden State Warriors credit card. Get something that really just is a Visa or MasterCard, but to you and to Disney or to the Warriors organization, it's actually a legitimate connection and an expression of loyalty, however you want to think about it. There's a lot that can be done on these two different levels, and financial services is all about that, of making it, giving personalization while also having very general, low cost, very effective platforms. So I see crypto going that way, but who the hell knows? It's
Yep.
And it's certainly possible we're going to get a crypto desert, which isn't necessarily a bad thing. What came out of the tech desert of the early 2000s was, allow Google to really create a dominant and maximally networked, affected search engine. It allowed Facebook to come out with really Web 2.0, without it being so crazy like it was in the late 90s, where any sort of idea people had, there were a dozen companies trying to do it.
Yeah, I mean, a few years of letting the crypto mature and kind of figure out who the real winners are and what the business model really is would not be a bad idea, without a bunch of people jumping in and out because they can become instant millionaires. I mean, it's pretty amazing how much personal wealth has been created through crypto, or at least seemingly created through crypto.
Yeah, we talk about wealth creation. And we always think about it in the stock market, and there's something to point to, and that a similar amount of wealth creation in crypto is just hard to wrap your brain around yet. But the same thing was true in the 90s when we were looking at these internet stocks. And yes, it was only 5 out of 100 that ended up creating value, but they created a whole hell of a lot of value.
All right. So last question. So is all this stuff that's been happening in the last 4 months dented your sense of optimism about the future?
The biggest thing is Russia invading Ukraine. I think of the world as having, when we think about the world of Ingenuism and the benefits that it brings, it's really stems from the fact that we live in a world where for billions of people, their material wants are all met, and they have access to basically all the information that's ever been created by all human beings. And there's a huge upside to applying their ingenuity in ways that make other people's lives better because they get paid for it. And that's the kind of world where progress is supercharged. The world that most of humanity has lived in for most of history is a world where you spend a lot of your time trying to survive, and then you spend the rest of your time either trying to figure out how to steal other people's stuff or how to keep other people from stealing your stuff.
Yeah.
And it leaves very little surplus ingenuity to actually make the world a better place. And I thought we were beyond that. I just thought there's no, there are exceptions that you can point to, but there's no general trend towards zero-sum activity. everyone's trying to create value.
Negative,
And
negative sum activity, right?
again, negative, and then of course war, and these always end up being negative sum. And part of it is because direct, just destruction, and some of it is indirect because you're basically using up all this energy and passion and ingenuity by trying to channel your citizens' wrath towards this country that's basically exactly the same as you. I just didn't think it would happen. And if it were there are exceptions, and there's a long history of studying resource-rich countries where all the attention goes to expropriating the resources rather than trying to build value, and how it's a horrible equilibrium because they don't progress and they get poorer and poorer even though they have all these resources. Well, I just didn't think a country like Russia could be that way. And then the secondary effects of now, the world has to spend more money trying to figure out what we're going to do in a world where there are actually countries that invade other countries. And then there's just a movement towards there's always a movement towards less freedom, less experimentation. It's just this whole idea of having to hunker down and deal with what's going on in the Ukraine makes me very pessimistic, because there's no reason to think that the Ingenuism equilibrium isn't fragile. I like to think that it isn't, but every time every invasion, but it's even the small things, every time, regulation gets onerous, every time their taxation gets more complex, it channels ingenuity away from productive outcomes, and it changes the trade-offs between like how much benefit can I garner from applying my ingenuity in creating a new technology that's going to benefit the world versus solving this particularly thorny tax problem. And when you change those, there's no reason to think that there isn't a inflection point. And if there is, I don't have any idea how close we are to it, but it would be just a massively tragic outcome for us to start sliding the other direction. Yep. And I'm not pessimistic about that yet. I'm not there yet, but that is the one thing that has made me look at the world and say, yeah, maybe I should own gold.
All right.
I don't, by the way, but maybe
a little bit. All right. Thanks, Robert. So we will be continuing to put up these podcasts and videos. We will also be restarting this Substack. So stay tuned. In the next probably couple of weeks, you should see a new Substack come out. If you're not already subscribed, you can do so on ingenuism.com or substack.ingenuism.com and sign up. And I will see you next week. Thanks, Robert.
Thanks, Yaron. Bye.
Bye. All right, good.